Turkey just panic sold 58 tons of gold in exactly 14 days. Meanwhile, the wealthiest sovereign funds in the Middle East are quietly dumping massive amounts of gold bullion straight out of the London vaults. We have not seen this kind of extreme selling pressure in nearly 70 years. At the same time, oil prices are going absolutely crazy. They are shooting past all expected levels. But Wall Street is completely ignoring the real story on television. Right now, there are two specific industries quietly soaking up billions in institutional money. They are absorbing cash at a pace I have not seen in a very long time. If you understand what is actually driving this massive shift, you can set up your portfolio for the next 10 years. It is the ultimate wealth building setup. But if you miss it, you will be stuck on the sidelines watching everyone else get rich again. So my promise to you is simple. Over the next few minutes, I'm going to show you exactly why this massive gold sell-off is creating a rare window of opportunity. I will reveal the two surprise sectors where the big money is flowing right now. And most importantly, I will teach you the exact framework my Wall Street mentors use to position themselves before the crowd catches on. My name is Felix. I used to be an investment banker. Now, I spend my time teaching regular people the exact strategies Wall Street uses behind closed doors. Over the last 6 years, my retired Wall Street mentors and I have taught over 20,000 people how to invest like the big players. I want to share this insider knowledge with you, completely free. Right now, we have a perfect storm. We have forced selling in gold, we have a massive oil shock, and we have a flood of money rushing into sectors nobody is watching. This combination is the exact setup my wealthy mentors taught me to look for. Think of it like a giant game of musical chairs. The smart money is moving their chairs before the music even stops. We need to move our chairs right now too. You probably just want the names of those two secret sectors. You want the quick shortcut. Everyone wants to get rich by Friday. I completely get that. I will give you the sectors. I am not going to hold you hostage. But giving you a ticker symbol without the underlying strategy is entirely useless. It is like handing you the keys to a Ferrari without teaching you how to drive. You will just crash. To actually get value out of this and build real wealth, you need to understand the institutional framework first. You need to see the market the way the banks do. Wall Street looks at the market in three distinct layers. You need to understand all three. Layer one is forced selling. This is a temporary event. It happens when giant institutions are essentially forced to dump their assets. They are bleeding cash somewhere else, so they have to sell what they can. I always smile when I see this. It creates a massive window of opportunity. It is a silver lining. Right now, we are seeing massive forced selling in gold and silver. There is no lack of demand. People still want gold. It is just a temporary margin call. The big players need fast cash, so they are dumping gold at a discount. The asset is not broken. The seller is just desperate. Layer two is the fundamentals. These are the deep structural changes happening in the world. This is what creates real long-term demand. This is not about making quick cash by Friday. This is about building wealth that lasts for decades. Right now, one of those two secret sectors getting flooded with money is driven entirely by fundamentals. The madness going on in the Middle East is creating a huge global shockwave. Higher oil prices are having a massive domino effect. When oil gets too expensive, the world panics. The market starts desperately looking for other energy sources. That shift moves billions of dollars overnight. Layer three is innovation. This is how the smart money spots disruptive opportunities before the crowd even wakes up. Innovation moves in waves. Picture dropping a rock into a quiet pond. The first ripple is small, but it grows bigger as it moves outward. When a major technology breakthrough happens, what does it attract? It attracts money, massive amounts of cash. But where does that money come from first? It comes straight from the institutions. The hedge funds and the big banks pour their money in quietly. They take the absolute best seats at the table. Then, and only then, does it become mainstream. Mainstream is just a polite word for retail investors. By the time regular investors hear about the innovation on the evening news, the institutions are already counting their profits. Think about these three layers like a giant shopping mall. Right now, three totally different sales are happening at the exact same time. Layer one is the clearance sale. Everything is deeply discounted. That is your forced selling. Layer two is a grand reopening. A massive store completely changed its business model. That is your structural shift. Layer three is a brand new shiny store. A completely new brand just opened its doors. That is your innovation. Each one of these is a totally different kind of opportunity. The smartest investors know how to spot all three. Most regular investors only ever look for one. They miss out on the other two completely. You probably feel like you always miss these massive market moves. You only hear about them after they happen. After the huge profits have already been made. You want to catch them early. You want to be the one taking profits, not paying for them. I will show you how to do exactly that. I will reveal those two hidden sectors the smart money is quietly pouring into right now. But to truly understand why they are buying them, We have to look at the strict rules Wall Street follows. Wall Street does not guess. They do not throw darts at a board. They have a proven framework. If they just guessed, banks would fail and people would get fired instantly. If you want to get truly serious about this, I actually run a completely free training class on the weekend. I spent 2 full hours teaching you the exact structure Wall Street has used for 50 years. It is designed to turn chaos, war, and uncertainty into a massive opportunity. But for right now, let us break down these 3 layers one by one. Layer 1 is forced selling. Let us look at Turkey. Turkey sold 58 tons of gold in just 14 days. They did this because of the massive conflict in the Middle East. It was the largest drop in their gold reserves in 7 years. Why did they do it? They had to desperately defend their own currency. That is a massive, aggressive sell-off. It wiped out all the regular gold fund buying during that entire period. But it gets even crazier. India is now selling more gold than it buys. The massive wealth funds in the Middle East are also dumping gold. We are seeing 45 tons of gold leaving the vaults in London. That is way above normal. These massive funds in the Middle East are privately owned. They are owned by royalty. They do not have to report what they are doing. They do not have to tell anyone. The selling is completely hidden from the public. This massive hidden selling perfectly explains why gold dropped by DBI 20%. They got a margin call. That means they suddenly needed cash immediately. But these countries did not stop believing in gold. Gold is not broken. This is strictly an emergency. They are just selling the family silver to pay the bills during a massive crisis. They are going to buy all that gold right back. They absolutely have to. They are sitting on massive oil and gas reserves. Once the oil money starts flowing heavily again, they will buy the gold back. So opportunity number 1 is simple. It is gold and silver. There are 2 very different types of demand for these metals. First, you have investment demand. People buy it to store wealth safely. Gold is almost entirely driven by investment demand. Silver is totally different. Silver has huge investment demand, but it also has massive industrial demand. Silver is used in solar panels. It is used in electronics. It is used in heavy manufacturing. Silver prices get knocked down hard sometimes. It is a very bumpy ride. But the industrial demand is not going away. In fact, it is bouncing back stronger than ever. The demand for silver from factories is already higher than what the global mines can even pull out of the ground. At the same time, nobody is opening new gold mines. The entire world is completely short on gold and silver. Do not just take my word for it. Try to go buy some physical gold right now. Seriously, just ask a local dealer how long it will take to get delivered to your house. You will be shocked. The wait times are incredibly long. When forced sellers desperately dump an asset, what happens? The price completely crashes. The price drops far below what the asset is actually worth. This is textbook Wall Street thinking. The long-term reasons to own gold have not changed one single bit. Every major bank has a massive price target for gold. They expect it to hit $5,000 to $8,000 an ounce. 95% of the central banks in the world say they plan to buy even more gold. Our own currency is going to face massive pressure. Our government keeps spending trillions on defense. Our national debt is exploding, and other countries are actively dropping the US dollar. All of these points lead back to gold. My overall case for gold has not changed one bit. The big players are going to buy massive amounts of gold and silver. The structural demand is absolutely still there. We have covered this extensively in the past. The only thing that changed right now is the price tag. You're getting a massive temporary discount. Why? Because a few wealthy countries suddenly needed emergency cash. They held a fire sale. Does this mean you should rush out and blindly empty your bank account to buy metals? No, you always have to make your own decisions. But the setup is staring us right in the face. Now let us move to layer 2. This is the structural shift. This is where the long-term fundamentals change. And the specific asset getting flooded with institutional money right now might shock you. It is coal. Yes, coal. The dirty black rock everyone hates. The ancient fuel everyone promised to stop using. But right this second, massive institutional money is pouring directly into coal. Why is this happening? And exactly which stocks are catching all this money? I will break it down for you. You probably want to know exactly which companies are absorbing all this institutional cash. You want the exact names of the stocks catching fire right now. I will give you the exact tool I use to find them in just a minute. But first, you absolutely must understand the massive domino effect happening in global energy. If you skip this part, you will buy the wrong things at the completely wrong time. The reason coal is exploding is actually very simple. High oil prices make coal highly competitive again. When oil prices shoot up, running a country becomes terribly expensive. Right now, oil is hovering near $90 to $100 a barrel. That is very high, and this is not a short-term blip. The biggest banks in the world project oil will stay around $100 for the foreseeable future. When oil and liquid gas get too expensive, countries panic. They still need to keep the lights on. They still need power to run their hospitals and factories. So what is the absolute cheapest available alternative for power generation? It is coal. Think of coal like a dirty, noisy backup generator. Nobody actually wants to use it. It smells bad. It is loud. But when a massive storm hits and the power grid completely fails, you pull the cord on that ugly generator. You have no other choice. You have to survive. Look at Europe right now. Their natural gas storage is critically low. It is now actually cheaper to run coal-fired power plants than gas-fired plants. It is highly ironic. Countries like Germany aggressively shut down their clean nuclear power plants. They wanted to be perfectly green. Now, they are desperately forced to burn dirty coal just to survive the winter. European power companies are aggressively buying massive amounts of coal. They are rebuilding their inventory for a massive, heavy coal-burning season. This massive switch from gas to coal will last through the end of the year if global tensions continue. But it is not just Europe. Look at India. India is the third largest oil importer in the entire world. They are currently using emergency government powers to maximize their coal power. They are burning coal at maximum capacity to offset the risk of losing their oil supply. The demand is completely off the charts. So, how do you actually find the right coal stocks? How do you see where the smart money is moving? I helped build a platform to solve this exact problem. It makes hidden institutional data completely available to regular people. We have a powerful artificial intelligence tool built right inside it. You can literally just ask the AI to show you the top coal stocks. It instantly pulls the data. Most people have no idea how to find these companies. This tool gives you the exact names in seconds. I'm not saying you should blindly buy them, but these are the exact stocks moving upward with the massive price of oil. It is an incredible way to track data. You can instantly create custom watch lists. You can turn those lists into targeted news alerts sent straight to your phone. We are upgrading all our current users for free, but we have exactly 456 early access spots left for new users. You can lock in your access before the price jumps. It costs about $16. That saves you 45%. Plus, there's a totally free trial. You take absolutely no financial risk. You can secure your spot and test it out today. But let us get back to the massive oil story. Because this oil shock is not actually just an energy problem. It affects something much, much bigger. This massive oil shock is not just an energy problem. It is actually a massive steel structure. As the United States pours trillions of dollars into fixing crumbling infrastructure, we need massive amounts of steel. As the government increases defense spending, we need more steel. And here is the harsh reality. You absolutely cannot make steel without coal. It is physically impossible. Think about it like baking a cake. You cannot bake a cake without flour. Every single bridge, skyscraper, military ship, and railroad track requires massive amounts of steel. The steel demand is exploding. Therefore, the demand for coal is exploding. This makes coal the ultimate contrarian play. For years, the massive climate change agenda made investing in coal completely toxic. Nobody wanted to touch it. Nobody wanted to fund a coal mine. It was considered a dying industry. For the last decade, investing in coal was like investing in typewriters. It was a joke. So what happened? Nobody invested a single dime in new coal production. Now, suddenly, demand is skyrocketing, but supply is totally choked off. We have a massive bottleneck. The world desperately needs coal, but there is not enough to go around. This is exactly the kind of setup Wall Street loves. The smart money spots the bottleneck and buys the coal companies while they are still dirt cheap. The second massive industry absorbing billions of dollars from Wall Street right now is totally different. I have been watching this sector for quite a while. Even in this crazy, unstable environment, it is performing beautifully. It is biotech. This is layer 3. This is the exact innovation wave I described earlier. This is brilliant new technology creating massive value out of thin air. The cash flowing into this sector is staggering. Even the crazy venture capitalists in California are throwing money at biotech. Venture funding went up an incredible 70% in a single quarter. That is $3 billion flowing straight into tiny biotech startups in just 3 months. At the same time, massive pharmaceutical companies are going on a huge buying spree. Mergers and acquisitions have jumped 31% in value. Big pharma companies have committed nearly $500 billion to manufacturing and research right here in the US. Massive giants like Eli Lilly, Roche, Merck, and AstraZeneca are quietly positioning themselves. I know what you are thinking. Buy coal and invest in big pharma. It sounds like the plot of a villain movie. It sounds completely backwards. But my job is not to judge the morality of the stock market. My job is to show you exactly where the massive piles of money are moving. There is a massive financial opportunity hiding inside these unloved industries. So why is this happening right now? Why are billions suddenly flooding into biotech out of nowhere? It comes down to a massive hidden crisis called the patent cliff. And if you want to understand how regular investors get crushed while insiders get rich, you absolutely must understand this cliff. I'm going to show you exactly how to play this cliff for maximum profit in just a minute. But first, You have to understand the terrifying math keeping pharmaceutical executives awake at night. Here's the simple reality. Between today and the year 2028, $300 billion worth of drug patents will expire. When a patent expires, Big Pharma's most profitable drugs suddenly face cheap, generic competition. When a cheap generic hits the shelves, the massive revenue on the original drug completely crashes. It can easily drop 80% practically overnight. This is a massive existential crisis for the billionaires running companies like Pfizer, Merck, and Bristol-Myers Squibb. They are staring down the barrel of a $300 billion revenue hole. They know their own internal drug pipelines are not big enough to survive the crash. They cannot invent drugs fast enough to replace the lost money. So, what exactly do? They take out their massive checkbooks. They buy up tiny, innovative biotech companies that already have promising drugs in development. They buy them at massive premiums. This creates an absolutely massive wealth transfer. The money flows directly from big pharma giants into the pockets of early biotech shareholders. This is one of the absolute most predictable patterns in the history of the stock market. Big pharma has a $300 billion hole to fill. They absolutely must fill it to survive. The only way to survive is to buy smaller companies. If you are sitting on the right biotech stocks before the giant acquisition happens, you win big. How do you find these tiny biotech companies? Once again, I just asked the AI tool. I tell it to give me a list of 10 US listed biotech companies right now. It hands me the list instantly. It gives you a perfect starting point. You can ask for 20 or 50. You can instantly see where the money is hiding, but Big Pharma's massive checkbook is only half the story. There is a second, even bigger reason I am obsessed with biotech right now. The second reason is artificial intelligence. AI is completely changing how drugs are invented. AI investment in drug discovery is exploding. AI is actively reducing the cost of discovering a new drug by 40%. It is making the entire process infinitely faster. In the past, discovering a brand new drug took decades. It took a massive team of 1,000 brilliant researchers working around the clock. Now, thanks to artificial intelligence, you can discover and develop a drug in a single year, and you can do it with a team of 20 people. This speed creates a massive flood of new opportunities. It creates thousands of new targets for Big Pharma to buy. But I need to be absolutely clear about something right now. If you blindly throw your money at biotech startups, you will lose it. Biotech is incredibly risky. It has a failure rate of nearly 90%. It is definitely not for the faint of heart. It is not for anyone with a weak stomach. There is a very specific, much safer way to play this massive innovation wave without betting your entire house on a single failed drug trial. I will show you exactly how to structure that trade in just a minute. But first, you have to understand the two main paths to actually owning biotech. Path one is buying the massive, established giants. Think of companies like Johnson & Johnson. They are huge. They are stable. I currently own them, but that absolutely does not mean you should rush out and buy them today. Path two is completely different. You can use an ETF. An ETF is basically a massive basket of stocks. Instead of guessing which single tiny biotech company will invent the cure for cancer, you just buy the entire basket. If you want to see exactly which ETFs the smart money is buying right now, again, just use the AI tool. Type in, "Give me some top biotech ETFs." It instantly builds a watch list for you. It gives you tickers like XBI, IBB, and IY. Those specific funds give you instant exposure to hundreds of different biotech companies all at once. It spreads your risk out massively. Remember, if you secure a free trial of the Trade Vision tool, you get this exact AI capability the second it rolls out. You lock in the lowest price and never pay the massive premium later. If you truly want to look into this massive biotech wave, I strongly suggest starting with the broad ETFs. Betting on single biotech companies is incredibly risky. In a perfect world, you only want to allocate 1 to 5% of your entire portfolio to this specific sector. Never go bigger than that. But again, I am not your financial advisor. I do not know your personal situation. I do not know your income or your risk tolerance. You have to make your own decisions. If you really want to dive deep and actually learn how to structure these specific trades, join me live this Saturday. We can run through these exact setups together in real time. But never forget the massive risks involved here. A tiny biotech company can spend 10 years building a drug, only for the FDA to deny their approval on a random Tuesday. Clinical trials fail all the time. Sometimes the wrong person gets appointed to a government board, and suddenly everything changes. There is also massive political pressure to artificially lower drug prices. Ironically, that massive political pressure is entirely solved by the upcoming patent cliff. When billions of dollars worth of major drugs suddenly go generic, the politicians will take all the credit. They will stand on stage and say, "Look how clever we are. We made drugs cheap." But it was going to happen naturally anyway because of the expiring patents. Big Pharma does not actually lose in that political game. Biotech stocks swing wildly. They bounce up and down violently. You must be fully aware of that reality. It is absolutely not for everybody. There are zero guarantees, but the underlying structural drivers are absolutely massive. The $300 billion patent cliff is real. The AI drug revolution is real. The massive flood of institutional money is totally real. At least, that is what the data clearly shows from where I am sitting. So, I have to ask, which of these hidden sectors surprised you more? You probably saw the forced selling in gold coming from a mile away. But did coal or biotech surprise you more? Drop the word coal or biotech in the comments right now. I am genuinely curious to see what you guys think. Every single thing I just showed you is not some random, thrown together analysis. The massive forced selling of gold. The massive oil shock is driving the sudden demand for dirty coal. The massive patent cliff is fueling the biotech buyout wave. This is the exact playbook I learned directly from my Wall Street mentors. These are guys who dominated investment banking for decades. They taught me how to read the massive shifts in institutional money. When you can actually see where the big money is moving, everything changes. When you know how to act before the crowd wakes up, you are in an infinitely better position to make massive profits. If you want to actually master this, go to felixfriends.org training. I will break this entire system down for you on a much, much deeper level. We will spend a full 2 hours mapping this out step by step. Remember the 3 distinct layers of the market. Layer 1 is a temporary dislocation. Right now, that is the massive fire sale in gold and silver. Layer 2 is a structural shift. Oil is completely stuck near $100, which means dirty coal is back with a vengeance. Layer 3 is the innovation wave. Biotech is currently surviving and thriving, even in this totally insane, unpredictable market. For me, these are the absolute best setups hiding in the market right now. These are the moves happening completely in the shadows. But knowing exactly where the big money is moving is only 10% of the battle. It is only the opening move in a very long chess match. It is like knowing the winning lottery numbers, but not knowing what time the store closes. Here is the harsh reality. Wall Street knows regular investors are trying to follow their money, and they have a massive hidden trap waiting for you. They absolutely do not want you to get rich alongside them. They want all the profits for themselves. So once they finish buying their cheap assets, they set a trap. There is a very specific, completely legal trick market makers use to trigger massive fake panic in the market. They shake the tree as hard as they possibly can. They want you to get scared. They want you to drop your golden apples. If you do not know exactly what this trap looks like, you will panic. You will hit the sell button at the exact bottom of the market. You will hand your best assets right back to the billionaires for pennies on the dollar. I watched the big banks do this exact trick every single day when I was an investment banker. You have to see this trick to believe it. And more importantly, you absolutely must know how to sidestep it. I broke this entire Wall Street manipulation tactic down in another video. Click the video on your screen right now. I will show you exactly how they rig the game and exactly how you can use their own traps against them to build massive wealth. Click the video on the screen. I will see you over there.